Good morning, you're watching Business World Live. I'm Danie Laurel. It's 10:06 a.m. this Friday morning here in Metro Manila. We are a little over 30 minutes into this trading day. Let's go straight to our top story. Bangko Sentral Governor Ben Diokno warns that the proposed one-year debt moratorium for borrowers under the Bayanihan 2 may pose serious risks to the banking industry. Specifically, Diokno said it will strain the bank's liquidity, which could undermine public confidence on the industry. Now, under the Bayanihan 2 version approved by the lower house, lenders are encouraged to extend the terms or agree to a restructuring of consumer and government loans. This would cover loans with payments falling due within March 16th until December 31st, 2020. The loan term may be extended up to 1 year and further extended by another year. Under the bill, banks implementing a debt moratorium will be entitled to regulatory relief. Diokno said that while all of this is a good initiative, a longer debt moratorium will force stricter underwriting standards among the banks, with some likely even to deny credit to at-risk sectors, including MSMEs. Bank Association and lending groups have also expressed concern on the debt moratorium provision on the bill, saying it could lead to closure among the financiers. The banking industry's capital adequacy ratio was 12.7% in the month of June. That is well beyond the 10% minimum requirement by the Bangko Sentral. Let's check in on the market, shall we? So let's open our Bloomberg terminal here this Friday morning. You can see us opening on the back foot, albeit still above 6,000 levels. We are trading at 6,050.15. That is down by 0.8%. We've been slumping since the start of this trading day, but that is still a bit of a gain. So 1.6% in the past 3 days. Recall that we were well below 6,000. It had suffered 5 straight weeks in the red, and this week has been generally positive. So still, nevertheless, breaching that 6,000 level. Let's see whether we can actually sustain that. Yesterday was one of the best trading days we've seen in recent weeks, really. We were up by 1.7%. A lot of optimism, according to analysts here, on a possible Russian vaccine being trialed here in the Philippines, but also just a shift to relax quarantine measures by next week is a big possibility. There was a lot of trades yesterday, value turnover above 17 billion, and foreigners finally turning to net buyers yesterday. They had an inflow of 3.74 billion pesos, the biggest net foreign inflow in 6 weeks. Now, there was a major event as well yesterday that may have also prompted these foreign investors to get in the market, and that was, of course, the listing of the first ever REIT, or real estate investment trust, by Ayala Land, and that is called the AREIT. However, those shares actually tumbled in its first day of trading. It closed 7.8% lower at 24 pesos and 90 centavos a piece. Its offer price was 27 pesos. Now you can actually see that it is inching back up. It is at 25 pesos and 15 centavos. Now, Phil Stocks' Piper Chaucertan said that there were actually some technical issues with the brokers, which contributed to the slump in AREIT's share price. And he also said, of course, all this uncertainty in the sentiment of the markets, and that had factored into the drop in the share price. But this, according to Rachel Cruz, who is from AP Securities, the short-term investors who bought the IPO on the expectations that this would immediately fly have been disappointed. They realize it's not really a stock meant for trading, but actually, if you take a look at those investors who might buy and hold REITs over the long term for the yield, they can actually acquire the stock now at a cheaper price. Now, at the listing ceremony, you had that yesterday. You've got Finance Secretary Sonny Dominguez saying that this REIT public offer signaling that the market is ready to resume business after all of the challenges. Speaking of challenges, however, you've actually got its parent company, AC, having reported earnings yesterday. Let's go through those. You've got Ayala Corporation's first half net income at 7.9 billion pesos. That is down by 80% year on year. You've got that on the back of revenues reaching 100.3 billion pesos. That is still down 30% year on year in the first half of 2020. However, COO is actually saying that they're seeing positive trends, particularly in BPI, Globe, and Ayala Land since the month of June. So that we're now already midway through August. They also said that they've taken advantage of the favorable debt markets in terms of cheaper interest rates there to solidify their balance sheet. Recall that they have done a lot of fundraising. They are expecting to raise $3 billion from various capital raising. This is according to their chairman, Jaime Augusto Zobel de Ayala. If you take a look at their segments here, you're going to be seeing a sea of red across all of it. Ayala Land in particular down 70%. We had already reported that. BPI as well down 15%. That was on the back of 15 billion pesos they had to set aside in loan loss provisions. Globe as well was down 5%. They had been very vocal that the subscriber in terms of prepaid was actually lower because consumers had less money to spend. AC Energy down by 80.6%, but this is mainly because they had divested thermal assets, and AC Industrials is in the red. That's actually on the back of losses also from IMI of $21.5 million. That was a slump in revenues following plant shutdowns, not just in the Philippines, but also in China and Mexico. So Ayala Corporation actually trading in the red here, worse than the local bourse that is down by 1.6%. Now, what I also want to look at are the refinery companies, because you've got actually Shell Philippines, so Filipina Shell Corporation, they had announced it is permanently closing its refinery in Batangas. They said that their operations were no longer economically viable. This was something that they had actually announced yesterday, and you can see that share price actually down by 0.5%. It was already down. I'm going to take out the 3-day chart for you so you can see that in 3 days it's down by close to 5% already. They said that they will be converting this facility, this refinery, into an import terminal instead. So instead of refining the oil themselves, they will just be taking in supply from other countries. But they did assure the workers would be taken care of. Recall that we only have 2 refineries here in the Philippines. Tabangao is one of the 2 refineries. The other one is Petron's Bataan facility. Now, speaking of Shell, they had also announced yesterday that they had net losses. They stood at 6.7 billion in the first 6 months of the year. That is a big reversal from the profit of 3.7 billion that they had a year ago. So as I mentioned, already tanking yesterday, but continuing that bloodshed and that pain. Now, I just wanted to take a quick on PCOR, which is of course Petron, because they are also likely to be watched out for by investors here. Recall that Ramon Ang had said that they will be resuming their operations when it comes to the Bataan refinery on September 1. And you can actually see Petron going against the Shell tide. That is up by 1.6%. And if you take a look at the 3 days since, of course, this announcement, it's actually up by 2.6%. Now, I want to move over into banks, especially given our headline story here, where there's a lot of concern on what's going to be happening when you talk about the banks. You've also got more earnings, let's say, from the second liners here. Let's kick off with Security Bank. They announced second quarter net income of 2.8 billion pesos. That's up 8% year on year. And the stock had actually already risen as much as 7% yesterday, closing at a 3.3% gain. It's actually the best performer still this morning, up by 2.7%. And this despite the fact that they have already allotted 11 billion pesos in loan loss provisions. Another one that is also in the green when you talk about the first half is RCBC. They said that there were strong trading gains, and that would actually lead to their net income up by 17% in the first half to 3.11 billion pesos. However, taking a look at RCBC and how that's trading this morning, that is the worst performer in the financial index. That is down by 1.8%. Now, more on markets later on in the broadcast. We've got First Metro Securities' Aaron Sai. Okay, let's check in on other headlines we're watching this Friday morning, the last trading day of the week. The government has been banking on the construction industry to boost economic activity, but it seems that particular sector is also seen to slump by as much as 10% this year due to the pandemic. Fitch Solutions sees the Philippines construction sector shrinking by 9.8% this year on year, following the grim second quarter economic data and the continuous rise in COVID-19 infections. The think tank also slashed projections of the country's infrastructure and building construction sectors, noting possible financial constraints on the part of the government. Economic managers have already cut this year's infrastructure program to 785 billion pesos. That's in order to realign more funds to COVID-19 response. Now, if all goes well, the virus is contained and normal construction activity resumes, Fitch sees the industry rebounding to 9.5% as early as next year. A lawmaker said the around 10 billion peso fund allocated for tourism infrastructure under the proposed Bayanihan 2 should instead be reallocated as direct cash aid for tourism businesses through the DOT. Cagayan de Oro Representative Rufus Rodriguez said direct assistance for COVID-hit tourism stakeholders is more urgently needed during this crisis than infrastructure by the TIEZA or Tourism Infrastructure and the Enterprise Zone Authority. If the fund will be redirected as cash aid, Rodriguez said this should cover the air and water transportation sectors, small resorts, hotels, and travel agencies. Rodriguez said some tourism stakeholders also worry that the fund will be used for political purposes if it will be appropriated for roads and infrastructure. The congressman pointed out that the Senate version of the bill also provides 10 billion pesos for the DOT to provide loan guarantees to hard-hit businesses, including those that need to modernize their facilities and retrain their employees. The BICAM committee will convene next week to reconcile the two versions of the Bayanihan 2 bill. Most European investors in the Philippines are not satisfied with the government's stimulus measures. This is according to the ECCP, or the European Chamber of Commerce of the Philippines, citing their survey that shows almost 75% of 203 businesses believe the stimulus measures are not sufficient. The respondents include 159 with European equity and 44 importing or exporting from Europe. ECCP said these businesses are asking for government support for internet connectivity and infrastructure, ease of doing business, and tax breaks. They also noted the importance of restoring consumer confidence. The European Chamber of Commerce said that though there are improvements in the ease of doing business, the progress was hampered by the lockdowns caused by the pandemic. The ECCP adds that the crisis also delayed investment decisions due to a supposed lack of clarity on national and government policies, as well as higher operation costs. Guys, it's been a long week with markets digesting a slew of second quarter earnings and everyone trying to make sense of the future. Nevertheless, it's actually been a healthy rally until today, and we hope that we are able to reverse today and actually end in the green this week. Now, here to analyze the situation with us, we have Aaron Sai from First Metro Securities. Good morning, A.
Hi, good morning, Danie.
Okay, so we were together earlier on trying to digest all these earnings that are breaking all morning here. Both of us trying to make sense of them. Very general reaction to the second quarter. Has it been worse than everybody had feared?
Yes, actually, I felt that the market was ready for bad news come to second quarter 2020. Lumping it up to the first quarter, I think the market was ready. The market was ready for to take the pain, for the first half of the year. However, some data, especially for the big companies, in the PSEi and the major industries, namely banks and properties, came even lower than expected. Among the notable names that have just eased the burden, so to speak, of the investors are just the retailers, mostly on the pure gold side. Even Jollibee is
Right.
not that good. I mean, it's bad. No, Jollibee's result is really really bad. And it has been going lower, for the past quarters already. But what Jollibee has reported just recently is really providing some not so good picture for the company moving forward. So I think while we are ready for this bad picture in on the aggregate, the market has still are now, I think, more worried, no, especially with the reimposition of the MECQ, and with
Mhm.
the uncertainty that might cause them to be more cautious moving forward.
Okay, let's kick off with Pure Gold when we make Himaidi's earnings. Just for our viewers to note, 1.6 billion pesos second quarter net income. That's up 24% year on year. First half net income also up double digits, 20% year on year, 3.4 billion pesos. Why do you say this was better than expected? This has been a stock that's been rallying all year compared to other stocks, and yet despite the imposition, as you mentioned, of the reimposition of the MECQ, that has actually shown resilience and even surpassed all of your estimates.
Yes, actually, the outperformance is actually nearly double, no, nearly double the expectation for
Wow.
the growth, especially for the first half. No, we expect this pure gold or similar industry or similar business, no, the essentials, to really weather the storm better than the others. However, what we saw, no, in the numbers of pure gold is that it has not only weathered the storm fairly, no, but it has weathered the storm gracefully, so to speak. No, so I think
Wow.
that the good news, so the good news about pure gold is that even though there are less people going into their stores, the people have been loading their carts more, no, than they used to before, no, and that happened not only in the not only during the first stage, no, or first days, no, of the imposition of the ECQ, but it was sustained towards May and June. So and what's better, what's better, and what actually drove the outperformance, we think, no, of pure gold was really the non-loss, no, or
Mm.
non, maybe uh, the maintenance or
Contraction.
even better performance of SNR, no. So
Okay.
there was higher ticket, there were higher basket sizes, there was even no drop in foot traffic for SNR, and we think with the margins expanding, no, especially for the SNR side, with more of the products imported, and with a stronger peso, I think that really somehow brought, no, the outperformance for pure gold.
Okay, and but this price is also, the market's anticipating future growth for the company. Does that mean that it's not just because they've benefited from the lockdown and the hoarding, but actually, even without the lockdowns, people are going to continue to spend in supermarkets moving forward? And is that like a trend that you are actually banking on?
Yes, actually, the resilience of the retailers are built on their business model. No, however, the results of 1H has not only confirmed that, but reinforced the fact that the changing shift in the consumption are really going towards the type that Pure Gold sells. No,
Mm.
what's even better for Pure Gold is that they have a very good cash position and no loans. No loans for even for the short and the long term, and that would give investor confidence that the growth that the new stores that the new stores that are in the pipeline moving forward would contribute more in the future growth of the company. However, I must caution. We
Mm.
must differentiate between
Mm.
the performance of the company's financials vis-a-vis the performance of the stock price. Now we know that year to date, the Pure Gold has gone for more than 30% higher, no, from
Right.
its price last year, no. The market has really discounted the possibility, which is now a reality or confirmed by the 1H numbers, no, that Pure Gold would be resilient. However, from where we sit now, even with an upgraded, no, target price of 60, we see 60 pesos per share. We see, well, decent upside, no, but not the same upside that we could have months back.
Okay, let's move on to Shakey's because this is a different picture. A lot were actually banking on pizza also because they're the first ones that could pivot. They had also announced at one point that their deliveries were almost covering now all the dine-in revenues, diba? And yet, the profit, it's actually a net loss for the first
Yeah.
half of the year. I mean, if they are having a net loss, paano na lahat ng ibang food, distributors where they already had this network? Tell us what that says about consumption habits and whether this is already worse is over.
I can't say that the worst is over, no, especially for the likes of Pizza,
Okay.
Maxpress, and Jollibee. No, actually they had the same this group. No, they had the same. They were subjected to the same situation given the ECQ. A lot of their stores are closed. No, they initially hoped that deliveries would tie them up during this pandemic. However, the actual results failed them. Actually, no, the actual results are showing that even there, if there are increase in the size of the deliveries, it cannot offset the revenue that they're getting in stores. No? So I think the moving forward, even with the signaling of the management, no, especially for pizza, they are deferring actually. Well, uh, similar to other industries, no, they're deferring their store expansions moving forward, which I think is really uh, the 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 need, no, which driven by the need to somehow conserve what they have today, no, in light of the
Okay.
uncertainty for the business moving forward.
Okay, so still a lot of uncertainty there. Pizza though trading at 5 pesos 39 centavos. Let's move over to construction and properties on the back of the Fitch saying that we might see construction going down 9.8%. The government was banking on infrastructure to actually continue. They were very hesitant to divert funds out of that. And now you've got also this article from Bloomberg saying that malls are looking into turning into e-commerce warehouses. That's so interesting, and this on the back of profits from Ayala Land, Mega World, 56% profit drop. I mean, tell us what's the future of the property industry. How much pain is this retail shift, and the fact that they're changing up malls into warehouses right now. How big of an worry are you having here?
Well, relatively, if you compare the SM with Ayala Land, no, definitely it would be a bigger hit to SM, no, because of the retail floor or gross floor area for retail of SM is really much bigger than Ayala Lands. No, however, since Ayala's operations really are also concentrated on the malls, no, although property development is still a higher contributor, no, definitely it would take a hit. The Bloomberg article, I also read it. No, I when I was reading it, I felt it was a
Mm-hmm.
somehow of an acknowledgement, somehow of an acknowledgement that maybe we should try to repurpose, no, or at least try to for a small segment of our big business, maybe we should have a pilot, no, of what we can have this used, no, and drive revenue from, no, absent the foot traffic that we enjoyed before. I think this is just a dry run. I hope it wouldn't develop into a more drastic change moving forward, because that's really telling us that the retail segment, the foot traffic is not really
Right.
expected to go back moving forward, or at least in the near future, and that's really bad, no, for the SM
Yes.
group, no?
Yeah.
Especially yes, because
So
they
not
have been
just
prepared
no
for it.
growth but contraction. Yeah.
Tama, no? And then meaning they were not really expecting a comeback, no, of the numbers that they were enjoying before.
Ever.
However, that's what's good actually for the property business, no? They have the quote unquote inventory, no? They have the space, eh?
Mhm.
They have that space. They just have to find the new user, maybe, no, the new user for it. However,
Interesting.
if the industry has been used to have those anchor tenants and those types of business in occupying their malls, then repurposing it maybe would first and foremost entail cost. No, I mean, if you're using your some part of your retail stores as a warehouse, no, for logistics company, then that would come with remodeling costs among others. No, plus it would definitely just be a small part at the very least initially in the redevelopment, quote unquote, for the property companies.
Okay, so a lot of things still hanging in the balance there. Let's talk about the AREIT very quickly. What happened there? I wouldn't say it tanked, but a lot were expecting that it was oversubscribed when it was being sold. What's it was already priced at the lower end than what they were hoping for. What's that got to do with it, especially since the markets had rallied yesterday?
Okay. Well, first and foremost, it came the issue price, no, the issue price at 27, yes, it was lower than the initial feelers of 30, 31 pesos per share. No, it must have improved the dividend yield, but the dividend yield at 27 peso issue price was about 5% gross. No, which is well higher than the bond than what you can get from the bonds. No,
Okay.
however, if you are in a risky market, no, in a freely tradable market, and the cash flow that would come from this issue would still depend on the performance of a property business, a property leasing business at that. No, that would make still the cash flow more risky. No, and unlike fixed income. I mean, yes, you're
Mm.
getting additional yield than the fixed income, but the fixed income is fixed income. No,
Okay.
the coupons are sure. No, in the case of the AREIT, no, the inflow would come from the earnings, and the earnings would definitely be the result of the operations, and the business now. No, the business now is not that in not in that good a position. No, that's the first. No,
Okay.
second. I mean, the yield is not the yield is higher than the fixed, no, than the fixed income, but the yield might not be low enough to compensate, no, for the bleak outlook for the rental or for the leasing business moving forward. Second, the E-rate was offered during the time that a lot of excellent businesses are selling at a deep discount. So I think
Okay.
when you're given a choice, no, when you're given a choice, should you buy a E-rate
Mm.
getting say 5 or maybe 6% yield at yesterday's close at 24.90. Well, 6% compared to what you can possibly get, for example, for banks, no, big and small banks,
Mm.
first and second liner banks are trading 50% lower than their historical mean book value. So
Oo.
I think if di ba, no, so given a choice, not given a choice, I think that would be even between Ayala Land and A-Rate, I would still go for Ayala Land for the upside.
Very interesting. So not cheap enough right now, considering the risks on the table. And finally, before we let you go, just financial space, because that was our banner story. In where how I understand it, it seems that the second liners perform better in the second quarter compared to the big guns, right? Is that something that you had expected? Is this surprising for you, given these are the ones that are really exposed to the MSMEs normally, and but they're making more or less the same profit actually as the biggest banks? Tell us what your position is on the banks.
Actually, for well, as a disclosure now, we are part of the Metro Bank Group. No, we are
Correct.
part of the Metro Bank Group. However, in general, no, in general for banks, I think what really drove the bad sentiment for especially for the big banks are the not so good bottom line, no? And that bottom line included a super huge, no, historically big, historically big provisions, no? And again, that I think is an acknowledgement of the possible effect, no, of the pandemic to their loan book, no? I think the well compared to the smaller banks, no, well, they might be on proportionally, no, they might have the lower loan book, no, on the consumer side, no, but however, relatively, I think the performance in terms of trading gains for smaller companies are better than the bigger banks, which I think really drove their earnings moving forward for first half, no. And I think some of those banks, especially SecB, has already upped their provisions in the previous periods, no,
Mm.
making their
Okay.
provisions now a little less than before, and which makes their earnings a little better than the others.
Okay, so financials actually up by 0.4%. Finally, I know it's very hard to give a call on the index, but we were at 5 straight days of losses. Now we're trading in the red, but we had traded in the green the whole week, and it wasn't so bad. We were up, and when we reached 6,000 levels, can you actually give a call right now for the year end, given that given the fact that we may be going back into a GCQ as early as next week, given the fact that the second quarter earnings are sort of out of the way, can you give a call?
Well, First Metro Securities. First Metro Securities call as of now, no, is for the index to end the year at around 8,100. No, however, I think that that call might come under review because of the reimposition of MCQ and because of the numbers that we're seeing now. No, so I think that there's a good
Sorry,
chance that
this is after the GDP print na?
hindi pa, not yet,
Hindi
no,
pa.
not yet.
Okay. Okay.
Yeah, so I think that would also play part on the possible revision of that number. No? But on the short term, no, I think we when we hit the 6.5 or 6.6 level, we have traded or we have trailed a downtrend channel, no, and as of yesterday, we have actually hit the resistance of that downward channel. So I think on the very short term, I think we could actually experience a down move from here.
Okay, thank you so much. So that was, of course, Aaron Sai with so much insights on specific stocks from First Metro Securities. Thanks for joining us this morning.
Thank you, Danny. Thank you for having me.
And that's a first look into the business day. Today is Friday, the last trading day of the week, August 14, 2020. Catch us again on Monday at 10 a.m. I'm Danie Laurel, and we are One News.